Hi everyone, and welcome to this afternoon's webinar, and thank you so much for your patience. As always, it's a lot going on in this session. If you've been trading already, there's certainly very different from last time we were together. But before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't think of using money that you cannot afford to lose. And for those of you who are with us perhaps the first time, this is me on the left, and on the other side is my husband David. We'll be running this session together. We will be looking at volume price analysis and how you can apply it to the charts in pretty much all time frames, actually. In fact, it is in all time frames. And in this particular session, we are going to be looking at indices. I think we've got a couple of commodities, and just looking at market sentiment, what VPA has been telling us on the longer term charts. As I said, we've had some dramatic moves in the markets thus far. And in addition, if I just move that away, here we are. We're actually going to be using the NinjaTrader platform. I've got number 7, David's got number 8, and all the indicators that we have developed for the platform, and we'll explain the indicators as we go through the webinar. Just turn that off for a second, move it over. And while I look at my screens and sort my charts out, I think I've got a couple of ETFs that I want to share with you. I've got the weekly YM because there's a really important lesson on VPA. But let me just pass back to David. Just raise my, there we are. I'll turn myself off. He can say hi, and then we'll start.
Thanks, darling, and a very warm welcome to you. I was going to say good afternoon. It's certainly afternoon here, but wherever you are in the world, I hope it's a little bit warmer than here, and a very warm welcome to you. I can see it in the attendees. We've got quite a few people, existing customers and regular attendees, so a very warm welcome to you. And if this is your first time, welcome. We run as a two-hander. We focus on NinjaTrader. Anna's on NT7 and I am on NinjaTrader 8. But as I said in the Forex webinar that we finished a little while ago, whenever you purchase indicators from us, the license covers everything. And by everything, I mean support, 24/7 support, truly 365 days of the year. We even have responded on Christmas Day because we have customers around the world. And in addition to that, it also includes all the upgrades, enhancements that we may add to indicators. We're always looking to improve, and we constantly have tweaks because platform changes occur from the platform vendors, which we have to accommodate. So we're always working on that side of things. And NinjaTrader 7 to NinjaTrader 8 upgrade was a massive undertaking, both for NinjaTrader, but I have to say even more so for us. But again, it's all included. You pay one license. The license works across the platforms, and indeed you can also transfer from platform to platform. A lot of customers start with MT4. They then migrate up to maybe MT5 for multi-asset reasons, and then perhaps they decide they want to move across to NinjaTrader. So we just enable that. There's no cost involved. We just make it all happen for you. So you've got an upgrade path from literally starting at maybe the MT4 or MT5, and then moving on to NinjaTrader. The next platform we're working on right now is TradeStation. So there is a path I'm not saying that one platform is better than another, but it's just a way that as your experience grows, you may find you want different markets to trade. You might want to trade futures, for example, rather than spot, or you might want to trade other markets which are not available on a particular platform. And once you have those opportunities available on the platforms, we just enable it for you, and there's no cost involved. And you can do that whenever you like in the history of being a customer of Quantum Trading. I'm going to pass back to Anna, and we will get going. If you do have any questions, by the way, happy to answer them in the chat box, or longer questions we will answer on air for you.
Well, with us last week, you will know that there was certainly a lack of volatility in the market. It was absolutely dire. certainly if you were trying to sort of take some points out of the indices, price action was very, very restricted to very, very narrow candles. And it was, you know, I think we said at the time, probably one of the most frustrating market conditions that you can be faced with, and it really does test you. Those sorts of market conditions test you. But we know that markets don't stay in congestion forever. They don't stay range bound forever, because otherwise no one would make any money. So before we look at the charts, I just want to double check here. I've got Forex Factory up. As we can see here, we've got some really nothing terribly exciting in terms of news. It's and it's an FP tomorrow, so the rest of the trading session, it's, you know, we're not going to be impacted by important items of fundamental news. The item that has really sort of put the cat amongst the pigeons is this one, is the ECB. Now, if you in the States and you trade indices, and you think, well, you know, why does something that the ECB does, or Mario Draghi say, why should that put some, inject some volatility in the market? Well, the reason primarily is they have taken a very sort of dovish view of for the currency. They're not bullish on the currency in the sense that there's no prospect of an increase in interest rates. And in fact, they're bringing back, I thought it was QE, but it's not. It's a facility whereby they are going to support the banks. The banks can borrow money at very, very favorable rates. They're creating more stimulus, so they're going to pour more money into the economies to see if they can generate some demand and stimulate inflation. So, you know, in other words, things are looking pretty tough for the Eurozone, and that's kind of put the market on a, you know, nervous on a nervous edge. And we can see here from the futures, the S&P is down 25. We've got that's the futures. Got the Nasdaq's down 76. Got the Dow. Is that 285 already? Wow, that's a big move. But the index that we really looked at last week to give us a clue as to what the market is feeling and thinking, and that is the VIX. Now, if you recall, we were with this last week here. It was in the 14 and it was in the 15s, and it was falling. When the VIX falls, it means you have complacency. Complacency means the market is it's ticking higher. When it's ticking higher, you know, markets fall much faster than they move up very, very gradually. If you're an intraday trader, that's where the frustration comes in, because, you know, you don't have a decent move to try and take some points or some pips. You're waiting for a trigger, a catalyst to come into the market. So what I've done here, this is not my usual workspace, but I put some charts together because I just wanted to maybe point you in maybe some different directions where you can go and pick up a sense of what the market is thinking and feeling, and also some instruments that maybe you've not come across before. Now, I have here a yen index, because, as we know, the yen is it's one of these currencies that can reflect both risk on and risk off. When the markets are risk off, the yen will be bought. When everyone is happy and taking on more risk, the yen will be sold. Now, this is the 5-minute chart of the yen, and you can see here it's been in a very, very strong up move. Great for me personally, because I'm actually short the pound yen, and so it's been nice that I've been able to take some money over there. And I'm also actually short the euro dollar, and, you know, today's moves in the euro dollar have been great for me. I've been in the euro dollar for a few days anyway, and I decided to stay in over this item of news because David and I looked at the charts, and it was looking more bearish than bullish, and we didn't think Draghi was going to say anything to change what we were seeing on the charts. Right, back to VPA and back to where we are now. I've actually pulled up the weekly chart of the YM, but you'll see this reflected when you get a market condition that we're in at the moment. You will see this reflected across all markets and instruments and timeframes. And really, from last week, if you look at the candle, this sort of spinning top candle, tiny little doji candle, This is the range that the index was trading in last week. You know, I defy anybody to try and take some decent points when you've got such a narrow range, narrow spread candle. The previous week was also a narrow spread. Now, the media at the time was saying, oh, it's great, you know, indices are going higher, you know, they're tracking higher, but they never give a sense of whether that's in, you know, reflected in a candle of this range or whether it's a candle of this range, because what you see in this candle is very, very different to what is happening in this candle, but more importantly, what is likely to happen next. So if we look at the volume profile under here, you can see if you take the range of that candle, you look at the volume, well, you know, even that is, I would say, sort of, would you say anomalous, David? Possibly. It's not, it's comme ci comme ça, as we say in Italy. But, you know, it went up on, I think I wrote at the time, it was on steady volume. That's what I called it, rather than anything spectacular. Then we have this candle here, and very different in appearance, as you can see here. You've got a small wick to the top and the bottom and a very narrow spread, but look at the volume, it's almost as much as this candle here. This is the first warning sign. You think, oh, do you know what, something's not right here. This is, you know, you cannot have this combination of price action and volume. It is not genuine, it is not authentic. Last week was really the clincher, because you have an even narrower spread and slightly more volume than here, but you've got a squish, even more of a squished candle, as it were. That is that's the big red flag. And what has happened? This is the result this week. Now, so far, the volume under this down candle is not huge. It's not massive, but we've still got another day and we've still got the session to go. So it could simply be a correction, a pullback to what was going on in, as I said, the previous 2 weeks. But look at the spread of the candle. You know, this is the kind of price action that we want to see. But it was nowhere near, nothing like what we saw last week. And we knew that was the case because of what was happening on the VIX. VIX was falling, complacency in the market. When there's complacency, you know, it is good feelings. You know, the market's chilled, as it were. But on the other side, we also describe it as the market was climbing what they call the wall of worry. It was going higher, trying to be pushed higher, but you know, it's and making a lot of traders and investors, well, more investors than traders, very, very nervous. So that's what I wanted to say about the YM. Now, what I've also pulled up is I wanted to look at the Russell 2000, but I don't have it on, I don't have the feed for it on NinjaTrader. And a great proxy for the indices, and I'm sure some of you know this already, is to look at the ETFs, and look at ETFs in 2 different ways. So I've got here, excuse me, I've got the IWM, which is the ETF for the Russell 2000. And the reason I pulled this up is the Russell is, we used to have a couple of traders that we knew that you know, David always talk, we've been with the YM and maybe sometimes we dip into the NASDAQ. We were kind of stuck with those two. And a trader we met, a couple of traders we met said, you know what, he said, you know, the Russell, it's great. It's a great index to trade. It's much more measured. It always reminds me a bit like the FTSE, doesn't it, David? It's got 2,000, I think it's medium and small cap. So, and it's also a much better reflection of what is happening, certainly in the, you know, the bulk of the US economy. The Dow is the kind of, you know, is the window dressing, is the, you know, is the show pony, if you like, of the indices. But the Russell is, you know, is really down in the meat and potatoes, as it were. But the nice thing about this is the ETF for the Russell, and I just wanted to highlight it because if you look at the price action, it's a great chart to look at VPA, understand how VPA works, what the signals are telling you in terms of the price action and the volume. And one example I just want to show here, we've seen here, we have this, you know, this steady move higher, then it hits the volume point of control and this very strong area of resistance. We have this little candle here, again, a bit like like the other one, a sort of spinning top, and look at the volume, a lot of volume underneath it, and you think, you know, that's possibly not going to go any higher. And it was also preceded by three up candles where the volume was actually falling. So that little group of candles with that combination of volume was signaling at the time that it wasn't very happy, expect a correction or a pullback. Now the issue is it going to be just a pullback, or is it going to be a full reversal? In other words, if we take that to be the primary trend, and we see this, is this just a secondary trend before the primary is restored? And how would you know that? Well, for a start, you look at the down. You've got the down candle here. You've got the wicks to the bottom, and you've got a reasonable amount of volume underneath that one. You think, well, on that one, you know, the only positive to that is it's got a wick to the bottom of the candle, so there is price support coming in. The next one is very similar, in the sense that you've got a wick, you've got a narrower spread, but the volume is falling. So if you like, you could say, well, maybe, you know, the selling pressure that has certainly emerged on those two candles possibly is waning. And in fact, the uptrend is then continued. We have three candles, a rising volume. We have another little down candle there, not a lot of volume underneath it. And then and you can see here on all of the down candles, the volume is not sufficient to push this price further down. And in fact, the primary trend does in fact kick in again. We do have a couple of occasions when it attempts to sort of roll over. Nothing terribly dramatic. This is what I want to say about this chart. And also from our quantum stable of indicators, this is our trend monitor. We've got the trend dots up here. Other than here, when they transition to grey, they are blue all the way. We have a little red one pop up here, but the trend monitor stays relentlessly blue. Then we come to this top, and we have a very typical rounded top. As you said, it's very gentle. It's not dramatic, but it's enough to tell us that possibly this market is now running out of steam. The spreads narrow. The candles sort of flatten off, as it were. You have this flattening off appearance to the top of the chart, and then we have again we have another little candle here, reasonable amount of volume, but doesn't go very far, and then we have this rollover. Now what we need to establish with this rollover is, in fact, is it now in fact from primary up to primary down? We've had a little bit of congestion, but not an awful lot. Or is it just another one of those pullbacks before it carries on higher? The only thing I would say is underneath this candle here, there is a substantial amount of selling. Not so much here, but that is in keeping with the candle. We had selling here, and as I said, this is the real clincher candle where you had a lot of volume, but a very, very narrow spread. We've got our support and resistance levels of where this is likely to go. Medium to short term, where's it going to head back to? Well, we have the volume point of control here at 140, is it 146 or so? Whatever it is, let me have a look. Let me push that down a minute. So that's that. What you could also do is, this is an inverse ETF. This is this is inverse to the Russell, and it's not a leveraged one. And it's quite an interesting way of, if you like, confirming what you can actually see on the actual Russell itself. So basically, as the Russell rises, this will fall. And ETFs are used for all sorts of reasons. They're used for hedge. They're used to to cover exposure, as it were. So I don't know, there's all sorts of different sort of tactics that people use for with ETFs. But this is just, as I said, this is a perfect inverse of what you see on the IWM. This is the RWM, and you've got the reverse, because this, as the Russell rises, this actually falls. And again, we have lots of VPA lessons on here. So I hope you found that interesting. David, do you want to say anything to that, or you're happy? Do you want to move over to? No, fine. Oh, so sweet. Thank you very much. And if you've got any questions on this, as I said, these charts, if you don't have them on your platform, they are available. You can, thinkinvesting.com have them. There's all sorts of places where you can actually get hold of them. And they're just a really nice way of looking at volume price analysis where you don't have a lot of volatility. It's much smoother, it's much steadier. You can spend your time, looking at the candles, looking at the volume profile, and really, begin to learn where you can spot those tipping points, those inflection points on the charts, and there is likely to be some kind of pullback, correction, or maybe even the start of a major reversal.
I'm going to switch screens over to Ninja 8, which you should be able to see any second now. Hopefully you can. Hopefully you can hear me okay. Brilliant. Right. Speaking of great VPA lessons, there's a whole raft of stuff going on right now, which is interesting. Because as an intraday trader, one of the things that we're always looking for is we're always looking for those opportunities, obviously to join a trend or to get in at the start of a trend, but we're always looking for potential reversal opportunities as well to get in early. And I just wanted to highlight this. This is on the 1 minute for the ES. We've now rolled over into June, so we're in June 2019. And I'll match this to, I've also got the tick charts running as well, and you'll see what I'm describing here. But basically, it's a scalping opportunity that sets up initially through the prism of volume price analysis, because when you're looking down here, and we can look at all of this volume and compare it one with another, because this is out to, if I pull this back a little bit, this is where we actually started over here. This is Hoppers 2 hour time. So all of this volume is comparative. We can compare one with another. We can say, this is ultra high, this is rather low, etc., etc. So we're comparing apples with apples. And really the setup that caught my eye was, first of all, we had a ton of volume coming in under this candle, lots of volatility. You can imagine, you can sense traders jumping into that one and getting caught, because the market then moved into a congestion phase. It was also further reinforced by the fact that we've got a strong platform of support here, which was breached next time round. But nevertheless, it just gives you that trigger of volatility, the trigger of market maker, big operator in participation on that particular candle, and the possibility of a reversal, or at the very least congestion. In this case it was congestion, but it's congestion over an extended period. This was 20-25 minutes, something like that. We then had a repeat, but what we had on the repeat was lower volume but a big wick to the bottom of the candle, and really just giving us a heads up that there was some decent buying going on in here. The important point about this is that as VPA traders, what we're looking at the whole time is not only for those anomalies, for those confirmations, what we're also looking for, which is perhaps a little bit more subtle, is where markets retrace back into areas of high volume, which are now low volume. We've had high volume here. We've seen a decent amount of buying coming in here. The market then trades in that price action again, but the volume here is relatively light. So in other words, within this very small fragment of price action, what that's really telling you is that the selling pressure that was here has largely been absorbed, and is almost all been absorbed here, because there is very little pressure to push this to the downside. We've got a narrow body, small wick, and not a great deal of volume below. So in other words, what you're looking at in this fragment of price action here is whereas in this period 4 minutes earlier the selling pressure was quite high, where the market has moved back into that area again in here, in this price spread here, the actual volume is now relatively low. In other words, the selling pressure that was here has been absorbed, it's dissipated, it's gone, and therefore the expectation is that we may well see a reversal to the upside. Now, bear in mind, this is a scalping opportunity. We're only talking going from 27.47 up to 54.55. So we're talking about 5, 6, 7 points on the ES, which is a decent grab in terms of ES return. But it just makes the point that if you're aware of what is going on in terms of volume price analysis, and also bringing in the other elements, we're trading around the volume point of control here, so we don't expect this to go very far. And equally, as I highlighted here, we've got this pretty strong area of price resistance, which indeed capped off that move at this level. This is on the accumulation and distribution. Basically, the indicator prints these levels automatically and updates them automatically. So as they are retested constantly, so the width of that line will become ever wider. It reflects the fact that the wider the line, then the greater the number of times this has been tested from below and held, and equally to a support area here, the number of times that platform has acted as a support platform for that particular price level. Now what we're seeing is the market roll over to pick up the longer term bearish trend. The trend monitor transition through here would have held us in, kept us in. Now I haven't got the trend dots on here, so forgive me, I've got them on another chart. Now we're starting to see a return to bearish sentiment with the trend monitor now going bright red. Bear in mind though, we're still trading around the volume point of control. We've got a decent platform in here. We need to see this hold below that level, possibly on down to the next level, move away from the low of this particular candle and then on down to pick up the longer term trend. And I use that term loosely in terms of 3 minute, 5 minute, 10 minute, and so on and so forth. This is the 5 minute, which really reflects that nicely also. We see some buying coming in. We have a pivot low formed. But when you look at the volume profile, we've got falling volume, we've got a classic arrangement, we've got rising price and falling volume. You do not expect that market to move very far, because if that were the case, then what we should be seeing is rising volume with rising prices, and we're not. We're seeing falling volume and a rising market. So the general conclusion that you would draw from that is that this market is probably not going to rally very far. Now the issue we've got now is that we've had this great price waterfall, which was going on earlier on, pretty much out of the starting blocks, which is unusual. We normally get quite a bit of volatility up here at the start, flip-flopping around, whipsawing price action, but it just went straight into it. And that's largely as a result of the fact that we had the ECB ahead of it, which was really giving it a helping hand. Now we're starting to see congestion build, certainly as far as the 5 minutes concerned. Now, if I just head back onto the, I'll come back to this workspace in a minute, but let's just go to the tick speed for a moment. Just pull that down there. Because again, if I pull up the 1 minute here, it's things like this that really catch your eye. This is, I hope you can see that. There we are, pull it up a little bit. This is you suddenly get a spike in volume. You get a spike in participation. The indicator turns green. It tells you, as over here, we've got lots of participation, lots of tick activity going on. So we know the market is moving, it's got some momentum, there's activity. When you're in these phases here, you can see the activity is falling away. We go into red, the price action moves into congestion, and there's very little direction. Once you start to see activity back in the market, in other words, high tick activity, we saw it here, narrow spread candle, lots of volume coming in. It's just a great signal that this is an anomaly. Why is it an anomaly? Because if this was selling, the price candle would be widened down. It isn't, it's narrow, it's got a small wick to the lower body. It's telling you that after this downtrend, we're now starting to see buying coming into the market as the price is supported by the big operators, and we get this run up, which we've just seen over on the time-based chart. Just pop that down there. And the same is true on 3, and we've got the same example really on 5, just in a slower way, if you will, where you're seeing this compression of price. You've got high volume coming in, and we're seeing the rally. Now, whether this is going to rebase the rest of the session, if we're going to trade around the volume point of control, if we're going to get a full-blown reversal, if we are going to see a full-blown reversal, then that is going to have to be supported by rising volume and rising price across the various time frames. If it isn't, then it isn't going to go far. In terms of the tick charts, down at the coal face on the tick chart, you really are trading at speed, and it's a question of jumping in and out of the market constantly. That's what tick charts are about. It's about activity. It's about seeing the raw momentum. You've got the Renko, where you've basically got a chart that's independent of time. It smooths out the price action. Precisely the same effect for tick charts. They smooth out the price action. They're independent of time, because what you're looking at is the number of ticks required to create the candle, and that's delivered from the tick speedometer. I've taken these off the actual, had these set up here. This is 347 to 358 at the moment. This one's up a little bit faster. Just changed that one over to 740. And then this is our slowest one, which is now at 1970. So let's just change that round as well. There we go. So we're now running at the right tick speeds. Let's just go back to the time-based charts again. There we go. And it's something we're looking for the whole time. We're looking for, we've had the price waterfall. Now we're looking at the possibility of reversal. If we drop down onto the 30-minute, let's pull that up a bit. There we go. Sorry, I've got this is the right contract. How strange. Volume's very odd there. But basically, just purely from a price perspective, we have the volatility, deep wick to the lower body of the candle. Fine, we know there's some buying coming in. On the next candle, even deeper wick, narrow spread, volatility again, but we know there's buying coming into this market. There has to be, because you wouldn't see that shape of price candle created if there wasn't enough activity and participation to drive this off the lows and back up somewhere near the open of the candle. And that's the reason you're starting to see a move potentially to the upside. And it's another reason for using multiple time frames, because every chart tells you something. It gives you a helping hand as to what is going on in the market. Is this a full-blown reversal, or is it merely a temporary pause point in the primary trend? In other words, in this case, the bearish trend. Are we just seeing a congestion phase building around this region, around the volume point of control after this price waterfall? Or are we like to see the market continue lower, or is this going to be a full-blown reversal from a primary bearish trend into a congestion phase, which is very classic, and then up into a primary bullish phase? If we're going to develop into a primary bullish phase, then certainly on this particular chart, on the 5-minute time frame, we've got some very, very solid resistance overhead here. Just move that out of the way. Up at the 2770 area. So in terms of potential points, we're now at 56. So we've got 56 to 70 maybe of relatively clear water. There isn't a great deal in terms of price resistance to hinder progress, but we have got volume here. Now we've got a low volume region here, we've got higher volume here and slightly lower volume here. So in terms of progress through this region, from a price perspective, not a problem, because we've got a decent amount of travel left if the trend develops. But in terms of volume, yeah, slightly more resistance in that respect. All that would require is obviously volume to drive it through there. In terms of taking a position in that market, what you'd be looking at purely from a technical perspective at any rate is really some sort of close beyond this region. If we get a close around the 2758 or 2759, then that would represent a reasonable opportunity to jump into the market long, because below you, you've got some decent price support in place here and here. And then it's just simply a question of deciding where you would want to put your stop loss. Again, that's a purely personal thing, but all I would urge you to do is use the chart to place your stop loss. Look at it from a technical perspective, and if it fulfills your money management rules, that's fine. Ideally, where you'd want it is down here, but that may be too rich for you, because we are getting down to 48, 47. So you might be looking at a scenario where you've got maybe 8 or 9 points of stop loss to potentially lose versus potentially maybe 10 points to the upside. So you're looking at something like 10 to the upside with a potential loss of 7 to the downside. You may not be comfortable with that. Personally, I would be, but you might not be. So but at least in arriving at that conclusion, you've based it on something practical and reasonable. In other words, the chart itself. That's how you've arrived at your constructed opportunity. You haven't arrived at it through some ridiculous risk-reward scenario where you said, well, I'm not comfortable unless I can see a 3-to-1 or a 4-to-1 or a 2-to-1 or whatever it may be. And I can assure you, again, this is purely personal. We are quite happy to take trades where the win-loss ratio is 1. You're looking at a scenario where you're putting out 20 points of risk or 20 pips of risk, and there maybe only be 20 pips on the table. Well, we're comfortable with that, but then you've got to remember we've been doing this for 20 odd years, so you do get to a point where you become comfortable with how the markets behave and what you are prepared to put on the table as a risk. But it has to fulfill your money management rules, and if putting a stop loss down here doesn't, then you can't put it there. You'd have to look somewhere else. Maybe a little bit higher up, maybe just below the volume point of control here somewhere, and so on and so forth. But at least you are considering the chart as your guidance for stop loss placement, but also more so, and more importantly, the potential that position that you're about to take in the market can deliver for you. And if you're comfortable with that, and you can see that we've got some decent amount here from 56 up to 68, 69 before we hit big trouble, that's fine. Then it's just a question of deciding where you get in, what your trigger is once you're in, put your stop loss in, and let the market run. And if you have the opportunity to tighten your stop loss up, just suppose the market moves up here somewhere, your stop loss is still down here, we'll tighten it up, get it up to the next level, get it underneath something that's going to give you some protection, the top level of here. So get it in under here somewhere, and at some point try and lock in some profit, at least a small amount, so you're trading with a riskless trade. In other words, you're trading with the market's money and not yours, which is always the optimal point to arrive at. Let's just go back to the 1 minute. Pretty fast on the 1 minute, doesn't suit everybody. But from an intraday scalping perspective, certainly on a market such as the ES, it's certainly one that you would need to be trading on, I think, or at least the tick charts. Trend monitor's transitioned on 1. We've got a pivot gone in there, so maybe a temporary pause coming up. No flicker on the. Let's change. No, I'll leave that on 1 minute. Let's leave that on 1 minute. Trend monitor hasn't transitioned on 5 yet. You wouldn't expect it to, but it probably has on 2 or 3 minutes. You would be seeing a change there, a shift in color. So there's not a flicker over on the slower time frames of 10, obviously, and you certainly wouldn't expect it down at 30. But I go back to the 30 minute. It just gives you that sense of what is going on, that sense that, okay, yeah, I can see the strong buying coming in, I can see the fact that we may be setting up for some sort of reversal here, and it's just pulling all the pieces of the puzzle together. Let's drop back onto the tick charts again. These tick activities, by the way, are not high. These are relatively low, in fact very low for the ES, which is the emini for the S&P 500. They are relatively low, but nevertheless, that's what we've got to work with, and that's what the tick speedometer does. It delivers the optimal setting to set your tick charts to, and that's where these settings come from. You don't have to use the actual. You can use the fib numbers here, but at the moment today it's running pretty slow, so I'm just taking them off here. So this has dropped a little bit, 297. That one's 980. They're all variable at the moment. 980. Let's put that one in. 778. There we go. So that's what we're looking at the moment. And you can see the trend monitor, that's transition blue on here. We've gone through the full color range here. We've gone bright red, dark blue. Now we're into bright blue as we exit and start to take off to the upside. And the same here on this particular chart. So you've got 3 charts helping to give you a visual metric on that flow of sentiment and the flow of the trend as it changes from one phase to another. And that's what the trend monitor is there to help to keep you in. I'm just going to pull up Trading View, because on Trading View what I've got is I've got different time frames on the CSI, and I'm particularly interested in the yen. I've got the 10-minute here, this is the 20-minute, and this is the 30-minute. The yen is this magenta line here. You can see on 10, it's very overextended, very overbought. There's been a huge amount of yen buying since the open, and that's why the indices have been selling off quite strongly. The question now is whether we're going to see the yen roll over and start selling, because if we do, that is going to really signal the change in sentiment, the shift in sentiment from risk off back to risk on. And if we see that reflected in the yen, then we're more than likely going to see that reflected in the indices as well. This is actually the, I've got this set up on, this is delayed by the way, so don't worry, this is delayed on TradingView. I haven't got the live data on TradingView. It's delayed by about 10-15 minutes. But nevertheless, this is live. This I've got on 45 minutes. You can see we've still got strong buying of the Japanese yen right out onto this slower time frame. But if we start to see a change on the fast time frames, then ultimately that will ripple through onto these very slow time frames, and that will then be reflected in this reversal, which is just starting to happen here. You can start to see the trend line beginning to rise through the midpoint. You're starting to see the trend monitor change, transition. It was bright red, what you expect to see all through this price waterfall. Now we've gone into darker blue. We're starting to see that shift through into a positive sentiment. The trend dots have been red all the way down here. They are now shifting. We've gone to grey. If we come out the other side, then we'll see those transition through into blue as well. And again, just to go back to what I was saying earlier on about price action within high volume price action. So here we've got high volume selling, lots of volume coming down in this region into here. Then we see the market retrace back into that region again. When the market retraces, the volume down here is much, much lower. It's telling you that that selling pressure is dissipating, is being absorbed, is dying away. And therefore we like to see possible congestion and a possible reversal in due course. Yep. I'm just going to transfer back to Anna for a moment.
Okay, I've actually got my workspace back to what I normally have, which is on the YM, and just a couple of points as well. We've had this, when you have such a sharp move lower, just want to show it on the time chart. This is actually the 5-minute chart for the YM. You've got volatility. On this one, it did come up with volatility. You've got a lot of volume coming in on the down candles. This candle here, which came down to the volume point of control, is really interesting because it triggered again another volatility candle. Just to go back to this volatility candle, reasonable amount of volume underneath it. As you would expect, if you look at the next candle, the first thing it did, it retraced to within the spread of the candle. And the decision, if such a candle is triggered on your chart, well, what do you do next? You really have to wait to see if either the high or the low is taken out. The low was taken out. Then it carried on lower. This is the volume under that one, slightly lower than this volume here that you see under this candle. Now, this candle is also quite interesting because it's got high volume and it's got a wick to the top of the candle. If it's in as we can see here, in a downtrend, this is can be often used as a re-entry point. So if you miss the initial move lower, I know we've got volatility as well. If you miss the initial entry and on the downtrend, and you see such a candle on good volume, then it is often a great precursor. It's a signal that there is a lot of selling pressure still in this move, and it is that you have the option to perhaps either add to a position or get into the position if you've not done so already. Then we had, as I said, volume under this one. Then we had another trigger, another volatility candle, and this time, and a lot of volume. We did have some buying support. We also had the VPOC helping to sort of stop the fall. This is transacted volume in this price region, which would also act as like a cushion, as it were. And then we had the first sign of buying. We had the retrace into the spread of the candle on a green bar with not a lot of volume underneath it. So even though it retraced, because of that volume under that candle, it doesn't look, it doesn't look pretty healthy, basically. Then the selling comes in again. But on these three candles, you have the volume falling and the spreads widening, which again is another clue that this move is now coming to an end. And we have a sort of little, it's not really a hammer candle, but there's enough support in there to push it high. Now, on the time chart, what you see here, you see the trend monitor is still relentlessly red. It's had an effort to rise, a pullback, another bit of a rise, but it's really moving sideways in the volume point of control. And this is where, if you are a trader that is looking only, really literally taking a handful of points, the only way you're going to do this in this type of market condition is you're going to have to use a non-time-based chart. I've actually got this. This is the Renko base equivalent for the 1 minute chart. And what the Renko does, it will highlight these potential opportunities. And with the trend dots and the trend monitor in combination, assuming there's enough range, if you like, you do have the opportunity to get in, but then you have to get out really, really quickly, because overall it is still looking a little bearish. And, with the yen still climbing at the moment and not showing any signs of slowing. I haven't looked at the VIX, see if the VIX is climbing as well. If you are going to take a trade counter to the bearish sentiment, you've got to be quick, you've got to be brave, but it is possible if you use a non-time-based chart as well. But as often happens after such strong moves, you'll find the markets will just simply quieten and maybe go into consolidation. And the 30-minute chart is a really good example where we've had volatility, retrace. It did carry on down, and a push back up, and now we're trading within the spread of the candle. So the next move, if you like, the levels are there. It's got to go beyond either the low of the day or certainly take out the high of that candle. So there we are. So after last week, it's been quite exciting, really, hasn't it? It's been good fun today, both from the perspective of the webinars, from trading, all sorts of reasons, and yeah, it's looking good. As I said, as a trader, we don't care whether the price is going up or down. We just want to be on the right side. As an investor, that's a slightly different story, and you have to be looking at other tactics to preserve your stock investments. David, anything else you want to say? No, that's it. Fine, brilliant. I think we're going to stop there because it's 4 o'clock, and as I said, it looks like it's going into congestion. There's no more news today, significant news. We've got NFP tomorrow. We'll see if there's any news. The big news that the market is waiting for is what's happening between China and the US. And until we get some clarity and some concrete details of what's been agreed or not been agreed, it's all rumor and speculation, basically. Very, very quickly, this is the quantum trading site. This is the bit on the site where you can find the details for NinjaTrader. As you can see, we also do MT45, and we also do indicators for TradingView. If you pop down here, you can click on, there's a slide bar, and what it does, if you click on the individual indicators, it takes you to their relevant page where you can find all additional videos, support pages, a really explanation of what you can expect from the indicators. You can buy one indicator, you can buy a bundle of indicators, or you can buy a complete package. All the prices are detailed on the website. If you buy one indicator and then you want to upgrade, we will always give you a credit. If you buy the package, whenever we develop new indicators, they are automatically added to your package for free, basically. So as we develop new indicators, the Renko optimizer for Ninja was the last one we developed for Ninja clients, customers who had the package. It was automatically added to their list of indicators. And as well, David will tell you, he runs the customer support side. It's 24/7 here, you know, whether it's Christmas Day, any sort of holiday, because we have, you know, traders from all over the world. So anything you want to add to that? That's it. I think it says thank you so much for coming along. If you've got any questions, additional questions to what we've covered today, you can drop me a line, anna@annacooling.com or david@quantumtrading.com. So enjoy the rest of the trading day. If it's if you're in a part of the world that you'll be trading the close of the US session. As I said, NFP tomorrow, and we'll see what that brings. And I'm sure there'll be lots of trading opportunities across all the markets. So as I said, have a great day. Have a great weekend, and we will catch you next time.